Great to see you again, John. So you've previously warned that airlines were enjoying a sweet spot of strong post-pandemic demand. Does this risk puncturing that recovery story, or is the industry now structurally more resilient than in past geopolitical shocks?
I think the industry is substantially more resilient. Of course, this has been a wipeout of activity for particularly the major Gulf carriers, Emirates, Etihad and Qatar Airways, and indeed a number of other airlines in the region. Certainly learnings will come from how the pandemic was handled. This, of course, is not an infliction on humanity in the way that virus was. This is a man-made military activity, and of course we don't know how long it will last. But the key thing is these Gulf hubs have become absolutely fundamental parts of the 21st century global infrastructure. They are essential for particularly east-to-west travel flows, for example, from around Europe through to Asia and Australasia. People have become used to going via one of the Gulf hubs and indeed flying more and more to destinations such as Dubai for tourism. So it's a major shock to that system. We're talking about 500,000 passengers a day, usually going through those three airports.
How quickly do you think the higher oil prices feed into things like ticket prices, inflation and consumer confidence in travel worldwide?
Of course, oil is notoriously volatile in pricing levels. You get the kind of spiking that we're seeing now. There have been higher levels. I mean, who knows where the oil price goes in the coming days. But I think airlines, again, have become more resilient to that kind of shock. Also, this particular point in time, when we're coming from a reasonable period of quite low oil prices, many sizable airlines and well-founded airlines financially have hedged large amounts of fuel for the year ahead. We just heard in the last week, for example, IAG, the major European airline group, talking about high hedging levels in excess of 70%. So that insulates them, not completely, but substantially against those fuel price cost increases on day-to-day spot markets. I don't think we're going to see dramatic changes in ticket prices for that reason right now.
China's only recently seen a strong rebound in outbound and inbound travel. Could renewed instability in the Middle East derail that momentum? And how significant is the Chinese traveller now in sustaining global airline and tourism revenues?
I mean, of course, it's going to have an immediate effect in terms of people asking questions about safety and security. But many other examples we've seen in recent years and indeed further back tell us that recovery does come. What we need to now see is a rapid stabilization of the political military situation in the region. We see already today Emirates and Etihad are operating some repatriation flights. But again, Dubai is a good example. Coming out of the pandemic, renewed confidence very quickly by showing that it could reassure passengers then about security in terms of health concerns, and I'm sure they'll be doing the same again now in the context of this military conflict. Yeah. China, as you said, in a very different market. It has shown a big rebound in outbound travel, and I think that demonstrated a wish of Chinese travellers to go and explore new parts of the world, indeed to visit maybe friends and family from the Chinese diaspora living in other parts of the world. I think that will continue as well. The market is resilient. People have a hunger to travel once they have a reasonable degree of confidence about safety. And certainly, as I said, the airlines, the authorities will be at pace to make sure that is communicated clearly as quickly and legitimately as possible.
John Strickland, thank you, as ever. Thank you very much.